Good evening everyone, welcome to this market update, not an outlook, not the beginning of the week. And yes, it has been a couple of weeks since I've done one of these. My monitor died, and up this part, basically the top third, I lost brightness and eventually it just went to 3/4, and I'm like this. Now I've got a new monitor. I previously had a 43-inch, now I've got a 32-inch, and this is very good size. 43, the very top, you don't really look at much, it's more just the 20-30 centimeters, and it was up to about 50 centimeters of height. Anyway, as usual, we'll start here with gold, and we'll go and look back and talk about what in the last video I was watching for. So we've basically been looking for this pullback of wave C. We had this I guess an A wave here and a significant B wave pullback, still higher low, trending sideways, significantly retraced from this movement up, which is more than you'd sort of expect. However, still higher low. Breaking this low, we'll need to reassess, but I'm still looking for a pullback up into these regions. Silver's interesting. It made a lower low here compared to the end of 5, which can be the case. It can still be a valid count as per Elliott wave rules, and this here still looking for a C wave pullback. So wave 1, 2, 3, 4, 5 of C, and then a continuation bearish. That's in many weeks and months. For now, looking for a pullback to continue. Breaking this low, we'll need to reassess. And that's how price action works. You watch the swings, so there, 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 there. And you count from the most recent back until you can gather what the overall trend is. So if you look at that, you've got the high here, and then ever since we failed to make a higher high. At that point you're looking for a break of this previous swing, and we broke that clearly there. So swing, swing, and once you have the high, one lower, previous low, lower low, at that point you're looking, yeah, we've confirmed it here. We have one lower low, one lower high, and then once that's a swing, we've broken it again there. So you've got one lower high, one lower low, and another one. What happens is, see this, it comes up higher than here. Traps a lot of people thinking, yeah, we're going back up. It's not the case. Yes, we broke this, made a higher high, right? However, that's the all-time most recent high relevant to that, and it's still a lower high. And a lot of people start getting very bullish once it breaks this previous high, and then liquidity is created, sellers drive it down. Look how quickly that moved, because there's a lot of buying going on. So will we get this continuation up to 22.57 in silver? Breaking this, as I said, we'll reassess. Oil still looking for this to retrace further into what's happening here, into the monthly. I'm sorry, I'll select that. So looking for that to continue down to 0.5 Fibonacci, around $65 as said in previous videos, and then failing that we'll look for a deeper pullback into 0.618, $50. Doesn't mean it'll stop there, but that's 0.618, the golden ratio, and a very common retracement level. Failing, we respect this, but you have to go one step at a time. So this is 0.382, 0.5, 0.618. You can't be aiming for that until this is broken. However, as we looked at in the previous video, when you go to lower time frames, you can identify the change in this monthly trend to identify this pullback when you're looking at a daily chart here. So what do you say here? We had a big run up. That's a swing high. That's the most recent all-time high, about $128, $130. We then drove down significantly. Lows relative to this, still higher lows. So the big dip buyers probably loaded up there. However, at that point you can see this swing is a lower, much lower high. And then we just trended sideways. And this is sort of trappy if you're trading that. But we drove up then up into 120 area. Let's see, all time most recent swing high, still a lower high, still trending bearish. Once again, people see this, see it there, slightly lower, drives down, then it drives straight back higher. Probably trapping a lot of people once again because they think, yeah, we've broken these two highs, support and resistance traders, and we're going back to break this high here, but no, it's driven down quite aggressively now into the $80 region. No market can ever be constantly bullish or constantly bearish. It's a big time frame down to a weekly, daily, and then if we look at oil, this is the intradays. So you've got a 4-hour chart of that same thing. You can see exactly what we just covered. An all-time most recent swing high. And then here. So if you look at the monthly, big view, and then get it right down, you can really time and narrow your sort of outlooks. So let's move on. UK oil, not even going to touch this, it's the same projection as US oil. Now the dollar, this is interesting. You can see last video we were coming up here to retest this previous high, and we had this marked in, break of previous high, then reevaluate another leg high before pullback, and that's what's happened. So last video we were watching this to go up and make a lower high and turn around into this pullback region, but we didn't get that, and that can happen. This bullish trend is obviously not over. We did respect it, but we came down and then drove straight back through up into the 110s, we had this marked out, 110.251. We actually had a higher open that day. Didn't last long, closed straight below. And you can see on the 6th we perfectly closed at that 110.251 area. Most recently, we've pulled back, had a big movement to the upside yesterday. Will we break this swing high? Continuing higher. One step at a time, remember. Step 1, to see and identify if this pullback's going to happen into the 100s that I've been waiting for. You need to see this not go higher than that first. Turn, break this swing low here, making a lower low, and then you want to see another lower high and continue. Depending on how quick it moves, but with a day like yesterday, we may be making another high here, because there's obviously a demand for dollars. And if you look at the another chart inverse to the dollar index, because remember the dollar index is made up of a basket of currencies, and it's heavily weighted with the European euro, their currency. And if I was to compare, you'd see these are exactly inverted, so you can use them to see which is following or which is lagging to sort of confirm each other further. You can see here on euro, we made this most recent all-time swing low, high, 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 low so far. Interesting. Does that mean we're going to continue higher? Stronger euro meaning weaker dollar. So therefore we go back to the dollar. If that's the case, we're getting a stronger euro, or we're making a lower high here, coming down, breaking this low to continue into this pullback, as I've been watching. Anyway, we'll wait and see. Now the yield, very interesting, quite aggressive. This was not my main bias. I was watching for a move lower. However, this can happen, and you need to reassess. You can't just be firm on your bias and never change, because you lose money. So here we were watching this to pretty much roll over here and continue down into the 2%. And we'll look at the long bond, same thing. Pull back into 150s. I haven't got that. And you can see what's happened. It's time to reassess. Break here, invalidated. Upside invalidated. It's pulled back far too much to consider this pullback ready yet. This overall bearish trend is not over. Yes, we made a higher high here, but same thing as we've seen in other charts tonight. What happens is these trap people. This is a swing, and it breaks up, rejects the same area, then drives straight up higher again, before then continuing with the trend. So currently I would be expecting this to continue and make a new low, possibly in the 130s and below, before then getting a pullback, which means in the yield this is going higher before we get that pullback. 3.435%. Wow. And if you look at the 2-year, let's have a look. 2-year note. Just the 2-year treasury. let's just use that. No, that's not the one I'm looking for. It's like the long bond. Let's try again. Where's 2 here? Bond. Sorry about this. I forget the ticker. I thought I had it added. Come on, where are you? Bond. Oh, look, sorry about this, guys. Just go and have a look at it yourself. But what I'm trying to get at is the yield on the 2-year is currently higher than the 10-year, and usually the longer the duration of the bond, the longer the maturity, the more return and yield it gives you, because you've got to have your money locked away for longer. So that to attract investors to buy that debt, they need to say, well, we'll give you this return for that many years, guaranteed. And when the 2-year is offering more than the 10-year, something's going wrong. And that's exactly what's happening. That was crypto. We'll go back to that soon. But anyway, moving on, we have Dow Jones. Now, last time we spoke, we're watching for this wave 2 to be over. Probably around here. It got quite higher than I expected. I was watching these levels at first. We broke that, as we have seen just in the charts previous. It's quite common. Breaks a previous high, sucking in bulls. But then look, swing high, still a lower swing high. For it to continue breaking this, it would need to break this high, break that high, break the all-time high. It sucks in a lot of people here. And you can see a lot of people probably bought aggressively, hence why it gapped quite aggressively on open that day, on the 10th of August. And we've come up 16th of August, moved sideways 1 day, 2 days, small little candles, showing that this momentum is really starting to slow down before significant movement to the downside. Small pullback, big move down, another move up, and then yesterday gap lower, and this quite aggressive 3.94% day. So the stock market and indexes is quite big. I've been waiting for this. The market can move really aggressively and move really quickly, and remember, as I've been saying, this is wave 3, intermediate wave 3, and within intermediate wave 3, remember, there are 5 waves. Wave 3 often being the biggest, largest wave. Sometimes, because I said often, you can get an extended 5th, but the 3rd wave is commonly the largest movement. And if you look here, this is 1, intermediate, 2, so now we're looking for 3. If we look at this, I'll start again, so I can just draw it out. So wave 1, 2, 3. Right. That looks smaller than wave 1, but anyway, just because the screen's like that. So what I'm saying is, within wave 3, we have 1, 2, 3, 4, 5 waves. And then within wave 3, here, of 3, we have another 1, 2, 3, 4, 5. And I believe what we're seeing here is the start of wave 3. We've had wave 1, wave 2. And I think we're starting to get ready for wave 3 of, remember, 1, 2, 3. And as we saw yesterday, it's a big move. We could be having some limit down days. And what a limit down means is the market basically from close to open opens 5% lower, and they put a pause in place on trading, I believe, for 15 minutes, and then the market reopens. So the Dow Jones is leading at this point. It's leading this current continuation of the downside, and what we need tonight to confirm this further is a break of this previous swing low of the 6th of September. We gap that tonight, or we open exactly where we closed. We're going to see a momentum continue, eventually breaking the 17th of June swing low to continue this wave 3. First region I'll be looking for is 0.5 and then 0.618. S&P. S&P, much the same. We're looking for it to come back into this region before rolling over. Went higher, and that can happen. And if you look, well, if you look here, it's a wave 1, this is a 2. So you draw oh, sorry, that's incorrect. Oh, look, I'm not going to do this now. I don't know what's going on. Anyway, exactly the same as the Dow Jones. Trending lower. Broke higher here. Respected this region at 4308 before rolling over. This wave 1, 2, 3. Possible 1, 2, 3 of 3. And 1, 2, 3, 4, 5 of 3 of 3. I know it gets a bit complicated, but look into it. Elliott wave theory, the Elliott wave principle, Frost and Prechter. So looking for a continuation to the downside, 0.5 Fibonacci on the monthly, 3500 on the S&P, 3200 and lower. Because remember, yes, this is intermediate wave 1, 2, 3, 4, 5, but what's above intermediate? Primary. So when these 5 intermediate waves complete, that's only wave 1 of primary, which means we have a wave 2. Quite often that'll be an ABC, 3 up, 3 down, 5 up, depending. If it's a triangle, expanded, a flat, what have you, double zigzag, you've got to wait and see. And then primary wave 3, wave 4, pullback, wave 5. And then what's above primary? Cycle wave, which means that all of that is wave 1 or wave A of cycle wave. And then above cycle there's another super cycle, grand super cycle, super millennium, more millennium, super millennium. A chart basically 500 to 1,000 years time frame. So the S&P here on the monthly too, if you observe, looks very bearish, this candle. It's like a candle of death at this stage. All that bullishness has just disappeared. You know, like, you look at the daily, you know, people really get bullish here because they're looking day to day. But get rid of the daily chart. Look at that monthly. This is what they're getting bullish about. This one candle here. One candle. Yes, we moved, you know, 14%. But we're in a bearish trend right now, and what that means is the momentum to the downside is much quicker than the momentum to the upside. And you can just see that in the amount of candles it takes to make this move here. 18.9%. 60 days. Alright, let's measure from the high here to the low. 13% in 14 days. 60 days, 19%. Let's find a similar one. Let's try this one here. There's a big one. There's some decent profits there. I'm going to keep going there. Let's find same movement. 15. Oh, we can't. We didn't do it. So we have to go back. Let's try here. 29th of March. %17.71% over 52 days. However, you can see the movement of the red candles relative to the black. Well, that's when you zoom right in. At the end of the day, it doesn't matter because we're looking at the swings here, and currently swing highs, swing lows. The highs are all lower. The lows have all been lower, so it's trending lower. To change that, you've got to respect this recent swing high, turn around, break here, then break there, then break there, to keep confirming the bullish trend. Nasdaq. This is one of the leaders at the moment, and much the same. Gap massively to the downside yesterday, and over a 5.5% down day. Wow. Russell leading, it's trending lower as well, not leading. You can see this low here, whereas the Nasdaq, it's almost at it. The S&P almost there, not quite. The Dow Jones is at that level. It's actually closed below it if you look last night. Closed lower, just. S&P, nope. Still got another 3908, 3932, so 20 odd points or less. Nasdaq, very close as well, about 30 points. Russell, still laggard, needs another 40 points. So anyway, let's move on to crypto. And of course, crypto follows the major stock market and the indexes that we've just reviewed. You can see yesterday Bitcoin had a big sell-off from 22,300 down to 20,100, $2,000 drop in a day. Almost 10%. I'm expecting all crypto to drop lower in line with the stock market. Ethereum, much the same. Even though, yes, it did have a higher high compared to Bitcoin and a higher low here, it's still trending bearish. And XRP, much the same. It's been moving sideways since June, since we made that bottom in the stock market to start intermediate wave 2, which was now changed. So I'd expect crypto and XRP, like the others, as the stock market falls, this will follow I'm looking for 25 cents and below to buy it up. So anyway, that's about it from me for this one. Exciting times if you're a bear. I am, as you may have already suspected. Yeah, you may think it's ethically wrong. For every buyer there needs to be a seller. The market's the market. It's allowed, it's just as legal as buying. And I buy and sell. I play the bias of the market that we have in front of us. So I'm here to make money at the end of the day. So currently I'm shorting, and you make some very big gains in a very short space of time compared to bull markets. So quick recap, gold to continue this pullback, breaking the low of 21st of July we'll reassess. Got silver, much the same, looking for a pullback, breaking this pivot here, 1750 we'll reassess. Oil, watching for a lower. Yes, we've moved lower the last couple of weeks. However, we could move a bit higher, but overall still I'm favouring it to move lower in the coming weeks and months. UK oil exactly the same, lower. Now dollar, very interesting. We did get a lower low here compared to these most recent lows yesterday. However, that one not quite. So we could make a new high. Failing that, we break this low, then my bias is back to this pullback starting to happen. Yields higher, new high, and then will we have a retracement? We'll see. Dow Jones, wave 3, here we come, look out. The bearish momentum will kick in very aggressively. S&P exactly the same. Expect some big moves in the coming weeks. September, October, into the end of the year. Nasdaq exactly the same. Look for it to continue lower down into 10,600 and below. Russell exactly the same, down into 1540s and below. Long bond, make a new low before then retracing. And currently on the futures S&P, we are up 0.53 of 1%. However, very small movement. This is what I mean. When there's so much momentum to the downside, it's hard for the market to get any steam, to have a decent pullback, and we have had a decent pullback here. So let's wait and see, people. Stay safe out there and make some smart decisions. Take care till next time. See you.